Hello, this is Brad Harvey with Harvey Investment Management. Today's topic is the 2021 market summary. A lot of things happened in 2021. Not all of them were great, but we did have some good things going on, economically speaking. I'm going to be focusing mostly on what happened in the United States, although we will cover some things that happened beyond our shores. First and foremost, we certainly did see our economy recovering from the COVID pandemic of 2020. I don't think we're completely out of the woods yet. However, things have certainly improved quite a lot, and the market showed that. All of these numbers are for 2021 calendar year, and they're not intended to be completely exact. They are rounded a little bit. First and foremost, the good news. The S&P 500, so the Standard & Poor's 500 index for the entire year was up 27%. That was also followed by the Dow Jones Industrial Average. Keep in mind that's only 30 companies. It was up 19%. And the triple Qs we look at, which is the NASDAQ 100, it's tech-laden, focused mostly on large cap tech names, was up 41%. So these are all really, really good things. However, we saw some things that perhaps aren't so good. The 10-year Treasury Yield on a percentage basis actually went up 65%. It started out the year at 0.91% and it ended the year at 1.512. So that is a pretty dramatic change. Also, we had some things that weren't going so well. The foreign large cap market, so remember, non-US big companies for the year were up 8%. On a relative basis, that's pretty good. However, when you take it in light of what happened in the United States, it certainly underperformed. And foreign small caps, so these are the emerging markets that we talk about, for the year were actually down 5%. A couple of other things to note, the broad-based commodity index for the year was up 41%. That's the Goldman Sachs Continuous Commodity Index. Inflation numbers aren't out yet. GDP numbers are not out yet. But keep in mind, a lot of these things can be a little bit confusing, but overall, our economy had a pretty good rebound off of the lows of 2020. We certainly have better employment statistics. We certainly have a better handle on what's going on with the virus. However, some of the stimulus that's been going on and a lot of the economic uncertainty and supply chain problems have caused prices to go up quite a bit. We study the CPI, the Consumer Price Index. We don't know where that's going to come in this year. Historically speaking, over the last 20 years or so, it's been averaging between 2 and 2.5%. We think those days might be behind us. Looks like the number this year is going to be closer to 5 or 6 or maybe even 7% for the entire year. We'll know that as we get closer to the end of January. What does that mean for our outlook in 2022? Well, keep in mind that it's going to be a little bit volatile from a political standpoint because it is midterm election time. So all of the House of Representatives, they're up getting their jobs again or trying to get reelected. And the Senate, a good third of those are also going to be up for reelection. So that can create a little bit of turmoil. However, all in all, profitability is pretty good in the United States. We are seeing some pretty good things, although we think that earnings growth will slow somewhat between 21 and 22. So this is Brad Harvey with today's topic, the 2021 year-end review. Thank you. Thanks for visiting our channel. We hope you found the information valuable. If you want to see more videos about investing, please click to subscribe. If you have any questions you'd like for us to answer, please send us an email to harvey@riagroups.com. We would love your feedback.